How does the incontestability clause impact a life insurance suicide clause? Imagine buying a life insurance policy and wondering what happens if the insured person dies by suicide within a certain period. Two key policy elements come into play here: the incontestability clause and the suicide clause. Understanding how they work together can help you see what benefits or limitations might apply. The incontestability clause is a part of most life insurance policies that limits how long an insurer can challenge the validity of the policy. Usually, this period is 2 years from the date the policy is issued. After that, the insurer cannot contest the policy for reasons like misstatements or errors, unless there's fraud involved. This means that once the 2-year window passes, the policy is generally considered locked in, and the insurer can't deny a claim based on mistakes made during application. The suicide clause, on the other hand, states that if the insured dies by suicide within a set period, often 2 years, the insurer will not pay the death benefit. Instead, they might return the premiums paid. This clause is meant to prevent people from buying insurance just to benefit from a quick payout if they plan to die by suicide soon after. Now, how do these two clauses interact? They operate independently but can influence each other in certain situations. If a death occurs by suicide within the first 2 years, the insurer will look into the case. If the policy is valid and no misrepresentations are found, the suicide clause usually applies, and no death benefit is paid. The insurer will return the premiums instead. The incontestability clause plays a role after the 2-year period. If the policyholder dies by suicide after this time, the insurer generally cannot challenge the validity of the policy based on misstatements. This means that the suicide benefit exclusion no longer applies because the policy is incontestable. However, if the insurer discovers fraud or material misrepresentation during the contestability period, they could void the policy even if the death occurs later. In simple terms, the incontestability clause helps protect the policy's validity after 2 years, making it harder for the insurer to deny claims. But during the first 2 years, the suicide clause is in effect to limit payout if death by suicide occurs early on. Once the incontestability period ends, the insurer cannot contest the policy for reasons like misstatements, which means the suicide clause's restrictions are more firmly in place. So, in summary, the incontestability clause ensures the policy remains valid after a certain time, while the suicide clause limits payouts for suicide within the initial period. Together, they shape how and when a death benefit is paid, providing clarity and protection for both the insurer and the insured.